Are you looking for a safer way to grow your money? Would you like to know about a strategy used by the largest banks in the world to contractually grow their money by 50 to 60% every 5 to 6 years? Whether you're a business executive, an attorney, or own your own business, this strategy will work for you. Of course, we all want to participate in the upward movement of our money and want to protect ourselves from losses. Perhaps the market crash of 2008 is still fresh in your mind, where literally Americans lost 30 to 50% of their wealth in a very short period of time. Maybe you hate the stock market, but just don't know where else to place your money. When you place your money in the stock market, you really only have two options. You hope your money goes up, or you pray it doesn't go down. There is a better way. Don't grow equity, buy it. For example, let's say that gold is trading at $1,400 per ounce, and you are able to legally and ethically buy it for $1,000 per ounce. You'd be rich because of walking into $400 worth of equity per ounce. Or, let's say that Google stock was trading for $530 a share, and you were able to legally and ethically buy it for $350 a share. You'd be walking into equity from day one, and you'd be rich. This style of buying equity versus trying to grow it can only be done in two asset classes. The first is real estate, where you buy homes at a discount and walk into equity, hoping to turn around and flip it for a profit. The other strategy is something used by banks and large hedge funds called a life settlement. Imagine for a second that a husband buys a very large life insurance policy on himself to take care of his wife after he has passed away, thinking that women usually outlive men. Unfortunately, due to life circumstances, the husband ends up outliving his wife. He is now left with a large life insurance policy he no longer needs, yet he still carries very expensive annual premiums that are cutting into his lifestyle and the future money he will need to live on. But instead of canceling his policy, he can sell it on the secondary market, and for very good money. Let's say, for example, that he owned a $5 million whole life policy and he'll build up over time $500,000 in equity. At this point, he has three options available to him. Number one, he can let the policy lapse and get nothing for his time and money. Number two, he can return the policy to the issuing life insurance company and get his $500,000 of equity. Number three, he can sell his policy on the secondary market for $1.5 million. He can get nothing, $500,000, or he could get $1.5 million. If this were you, what would you choose? Should he choose to sell his policy, that is a 300% increase on his money. This is a very big win for him and would place him in a good financial situation for the rest of his life. But it also ends up being very good for our investors. Through life settlements, our investors are able to walk into 50 to 60% equity from day one. Now imagine this, having a contract in place that dictates exactly how your money will increase. Having your money inside of a strategy that has no market risk whatsoever. And lastly, having a guaranteed insurance contract in place that is backing the growth of your money. With life settlements, you don't have to worry about losing or what the stock market is doing today or tomorrow. You only participate in the upward movement of your money, and everything is contractual. With life settlements, we increase our opportunities for upward movement and remove completely our chances of downward losses.
Today's investment landscape is more volatile than ever before. The chaos of market fluctuations, increasing energy prices, housing foreclosures, falling income, and high unemployment is contributing to the uncertainty of many corporate and private long-term investments. What can you do in such an environment? There are no certainties in financial investments, but there are solutions to hedge against such risks, to enjoy investment stability not realized by most, and understand without a doubt where your investments are heading. Conestoga International offers investors the opportunity to purchase predictable investment assets that transcend mainstream investment opportunities. Traditional investments offer 3 results: win, lose, or draw. Win when you are able to make a profit. Lose when your investments lose money. Or draw when your investments merely break even. Life settlements are unique because they are designed to offer just one result: win. Win early, win on time, or win later, but never just break even or lose. Investors know exactly what their payouts will be when they purchase the asset, and the payouts are backed by the most financially sound insurance companies in the world without guesswork or hassle. Conestoga International is committed to bringing the life settlement asset class to individual investors as a premier investment alternative, providing the opportunity to purchase portions of the death benefits of existing life insurance policies at significant discounts.
Well, really, there's some very distinct advantages with the life settlement asset class, particularly with the way Conestoga structures it. The payout is a life insurance policy, so it's very, very safe. In the history of the legal reserve system, there has never, not one time ever, been a death benefit on an insurance policy with a properly enforced policy that hasn't paid out. It is absolutely sacrosanct. It is a cornerstone of our financial markets, so it's very, very safe. At the time of purchase, the purchaser knows the payout amount, so it's very, very predictable. You know, you buy a policy with $1 million death benefit, upon maturity, you get $1 million. You know that. When do you know that? Before you ever put 10 cents into it. So it is a completely predictable asset. And finally, the payout does not fluctuate wildly with the markets, so it's very, very dependable. Again, you buy a policy with $1 million death benefit, upon maturity you get $1 million. It doesn't matter what the S&P 500 is that day, or the Dow Jones Industrial Average, or the price of oil, or the price of gold, or the state of international unrest, or which political party is in power. It just doesn't matter. This is what we call a non-correlated asset, meaning it's not directly linked with any other asset class. And as such, it is my contention that a properly diversified portfolio really deserves a very serious look at this asset class because of the very nature that it's non-correlated.
Conestoga International assembles existing life insurance policies by U.S. Legal Reserve life insurance companies rated A or higher by AM Best & Company, companies that are among the most financially sound insurance companies in the world. Individuals may purchase the right to receive a percentage of the proceeds from these policies at significant discounts. Conestoga International goes to great lengths to protect investors. Its structure is conservative and transparent. L.L. Bradford Certified Public Accountants reviews the escrow account on a quarterly basis. Purchased life settlements are held by the Conestoga Settlement Trust for the benefit of the investors. The trust is supervised by De Leon & Washburn, a regulatory law firm in Austin, Texas, headed by Hector De Leon, the former chief counsel to the Texas Department of Insurance.
In our role as general counsel is to oversee the compliance, to oversee the need for and compliance with regulatory issues throughout, so that there is transparency from a regulatory perspective, and so that there are checks and balances to maximize the safety to the consumer so that they do see the return of what they are seeking, and that is a fixed beneficial interest in the proceeds of a life insurance policy at maturity.
Teresa Fetty is the president of the Provident Trust Group, a $3 billion trust company that serves as the escrow agent for every investment in Conestoga's life settlements. Recently, Teresa was recognized as one of the top 10 women entrepreneurs in the country by Fortune magazine.
Provident Trust Group is happy to serve as the escrow agent for Conestoga. We receive and hold all participant funds and distribute the funds as necessary. We also assist Conestoga with the customer service and administration. All participants will enjoy 24/7 secure access to their account via the internet.
To better protect investors from possible premium calls that can occur when a policy does not mature when expected, premiums necessary to pay for the policies for up to 7 years are included in the purchase price, depending upon the insured's current age and life expectancy. In addition to protecting investors from potential premium calls, an interest-bearing premium escrow account is maintained by Provident for the benefit of the investors. Provident Trust Group selected Global Bridge, a $35 billion banking and trust company advisory firm, to employ its cash management program for investor funds held in escrow. Chris Davis is a principal of Global Bridge.
At Global Bridge, we work with 65 bank trust companies across the United States and 10 wealth advisors, representing over $100 billion in assets. Our number one job is protecting client assets. Similarly, with Conestoga International, we protect their assets on a daily basis. In concert with Provident Trust Company, we manage the premium reserve account. We manage the cash flow in and the monthly premiums going out. We purchase short duration and overnight securities that are safe and secure, settling the account to the penny on a daily basis.
Various states have passed laws that require life insurance companies to advise and notify their insured that selling their policies is an option, rather than allowing them to lapse. In short, the sale and purchase of existing life insurance policies is a win-win transaction. The original owner gets to sell a hidden asset that many times they did not know they had, and the buyer earns the right to help themselves in the future by helping someone else get what they want now.
You know, in a typical investment, there are really 3 potential outcomes: win, lose, or break even. And all of these other investments are really an educated guess based on past history and current conditions. What I love about the life settlement asset class with Conestoga, it's not win, lose, or break even. We know the inevitability of the payout. We know there's going to be a maturity. We know what that maturity is. So the question for our clients is, are they going to win early? Are they going to win on time, or are they going to win a little bit later? Well, in the financial services world, giving our clients the choices of win early, win on time, or win a little bit later, that's pretty compelling. And it's also very, very attractive.
Buying a discounted asset that's not tied to the rising rates or the equity market is an excellent strategy based on today's economic indicators.
Ask your advisor to prepare a proposal to show you how participating in life settlements from Conestoga could benefit you, and carefully consider the risk associated with the asset class. Not everyone may qualify. Ask your advisor about your personal circumstances. We look forward to serving you.